Hey, I'm Dan Fitzpatrick, stockmarketmentor.com. Welcome to Fitz in 5 here. Probably won't even take me that long. Okay, Peloton. This company came out at like really good timing when you think about it. Latter quarter of 2019, nice little, dropped at first, if you want to call a 25% drop bad, and then a rally off the bottom, almost doubled, and then with when COVID hits, down another 50%. COVID hits, nobody can go to the gym, nobody can do anything. You got to sit home, and then they have some gal who's not fat, pretending like she is, and she's insecure, and she's kind of I don't know, attractive, I guess, whatever. And she rides her Peloton bike, and she just rides her way all the way to success, and now they have a lot of money. So riding a Peloton bike is the way to go. Anybody who's ever ridden a racing bike like that before knows that if you ride anything like that on a regular basis, you get a very sore asterisk. I mean, it is sore. Not as much fun as it looks on the TV. And so, but still, people are buying the hell out of this thing, and it's going from the bottom ultimately all the way to the top. 850%. I'll take that move. But then what happens? Well, people are starting to get sore butts, I guess. We get a big move there, another move there, a higher one, and now what are we looking at? We're looking at a head and shoulder pattern. This is something that I talked about back here. I really, wore it out as far as how to be trading this stock. Some of the calls were right. Some of them were wrong. For example, this back here, I don't remember drawing it, but I know exactly what I was looking for. If this is what I drew, this is like a rising kind of wedge pattern. This is what you'd be looking for. You'd be looking, especially in a downtrend, you'd be looking for the stock to be falling out here and keep going. So obviously, the stock never did that. Instead, it ran up again. And so then, though, if you look at it here, this drop here, particularly if you're using common sense, is really not that surprising, because this stock was already in a complete role reversal. It went from bullish to nothingish to now bearish, lower highs. This is, this is like a top within a top. Okay, here's a top, and then here's another one down here. And if you want to just look at the whole thing, you could say, well, this is the head and shoulder. That's the left shoulder. This is the head right here, and then the right shoulder is actually this thing. So it's a big old massive head and shoulder pattern here. And when you think about it, people are wanting to come out of their caves now. I'm sure if you went on eBay, I haven't, you'd probably be able to get a Peloton bike for pretty cheap. Also, success breeds competition. I think the saying is ruinous competition. Excess profits breed ruinous competition. I think that's like the only thing from an economics class I remember. And so while Peloton's doing their thing, you've got Echelon, you've got, Hichimikuchi, Hopalong, whatever it is, all these different bikes that are competing with Peloton, and they don't have to pay for fancy commercials, and they're not setting the top of the market. They're coming in underneath, and all people are trying to do is burn calories by moving their legs around in circles. So this was definitely predictable. But so now what do? Hey, this thing traded 84 million shares today. That means for every share that was sold, some sad sack bought it. Hopefully it wasn't you. You could say, oh, I'm going to buy this stock and it's cheap. I'm going to get it really cheap. No, you're just getting it less expensive than you would have earlier this week. And I would actually say it's actually more expensive now. And I'll tell you why. because they reported a quarter that was absolutely dismal. In 2021, the expectation is that the earnings per share, they're going to lose 64 cents a share. In 2022, the estimate is that they're going to lose $2.19 a share. Their profit margins have gone over the last 4 quarters relative to the same quarter the prior year. Their profit margins have gone from up 6 to down 0.07, down 33.4, down 46.7. So they're losing a massive amount of money for every dollar that they make. I'm looking at this. Sorry to burst your bubble, Pelotoners. I think this can go right back to 25. I think it could go back to its IPO price, and I would say even below that. And here's why. Because right here and when it was here in 20, this is when COVID was hitting. This is, this is the good part of the thing. Now, people aren't really into Peloton. And if they're looking for stationary bikes, they got a lot of other choices besides Peloton. And, one of the things that you can kind of use as an example is Zoom. This is a great company. It's a great product. But you look at what's happened here. It's the same thing. When this stock actually peaked during the first year that COVID was around. And since then, it's been flirting with rebounding, but it really hasn't done that. So I think Peloton is going to succumb to the same issue that Zoom is. The only difference is Zoom is addictive, and you don't have to breathe hard to use it. Zoom, once you're into that, you're into that. We're starting to use it. Peloton, not so much. I have an assault bike. I love it. There's a rogue bike that I love too, actually more than the assault bike that I have. So people have options, and Peloton is, I think, coasting down the hill. If you're long, you're wrong.